You are listening to Charting Wealth's weekly review and forecast for the week beginning Monday, the 9th of May, 2016. This is the way we do this forecast and review. We will go through our four charts: the total market, the S&P 500, the NASDAQ 100, the Qs, so as we call it, gold. Then we will look at those charts on the weekly and the daily. We'll show where the weekly has been going, and we'll talk about what happened during the week, intra-week. Then we'll talk about the news that moved the market, what impacted it over the past week, and then what events may be occurring that we can foretell might be occurring to affect the market in the following week. This is the only time we look at the weekly charts. We don't look at them every day, but we love it when the weekly chart and the daily chart are moving in the same direction, and then we can find a buy-in point on our shorter 4-hour or half-day chart. So let's jump right in. Thank you for being with us from Charting Wealth. Now, we're going to first look at IYY. What is that? That is the iShares Dow Jones U.S. Total Market Index Fund. It shows us what's going on in the total market. Well, the total market went up for about 10 weeks. It went up from the 19th, the week ending the 19th of February, all the way through the 22nd of April. And then at that point, the market got skittish. It reached its high. We had an open red box on the week ending the 29th of April, and then we had a down candle on our Heikin Ashi, which is the average pace type of candlesticks we use. It's different than the typical candlestick. It helps us find trends, we think, a whole lot better. We see the derivative oscillator losing energy. The green boxes are getting smaller, and we have a slow convergence of the MACD and the signal line going down. Hasn't happened yet, don't have a crossover, but we're seeing some definite slowing after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 up candles on those prior 10 weeks after that bad start to the year where the market rolled over at the beginning of the year and went down until the 12th of the week ending the 12th of February. Then it turned around and started going up. Well, it's starting to rotate over, going down again. It hasn't happened yet. Nothing confirmed. Market's still in a confirmed uptrend on the weekly chart, but weakening. Okay, keep that in mind as you go throughout the course of your week. Let's look at what happened throughout the week on the daily. The market opened the week on the 2nd of May. We've got a 2-day trend line. The market's still well below that. A little bit of an up day on our Heikin Ashi type candlesticks on Monday, then down days Tuesday, Wednesday, a little bit up on Thursday, down on Friday. So again, confirmed down move below our 2-day trend line. Going to go back to our weekly chart now and move on to SPY, which is the S&P 500. For the record, the market was up on Friday 0.32% for the total market. For the S&P 500, down 0.36% for Friday only. Now, same kind of thing we see on the S&P 500. People say sometimes, why does it seem very similar in most instances to the total market? Because the S&P 500 is 500 big companies, lots of the total volume, but it's not the same. So we see a crossover going up on the market back on the 4th of March. The market up 10 weeks since we got our first green candle on the 19th of February. The market is weakening. 2 weeks of down candles. First almost a doji, not quite a doji on the week ending the 29th, but lots of loss in the derivative oscillator actually starting on the 22nd. An even bigger loss on the derivative oscillator for the week ending the 6th of May. Red down candle, little bit of up movement on that candle, but a much bigger wick on the bottom. So again, don't have a crossover yet, don't have a confirmed down move on the weekly chart, but the weekly chart is definitely weakening. Let's look intra-week. What do we see going on? We're going to check out the daily chart. We had basically a doji on Monday where the market was settling out after a huge move that prior Friday. That was Monday the 2nd. Down Tuesday, Wednesday. Bit of an up candle on Thursday, followed by a down candle on Friday with a big wick on it. So We are still below the 2-day trend line and trending down. So that is where we are as far as our weekly and our daily charts go. Now, those of you who listen to us on a daily basis, you know that we're waiting for a rotation over on our short chart and then a move back down to parallel the longer chart, which is our 2-day chart, in order to look for some potential trades or investments on our, again, virtual trades. We're not a stock calling service. You don't pay us for any of that. We don't do that. We're an education firm. We want you to learn how to do this, and then you make your own decisions, develop your own technique. So that is where we are as far as the S&P 500 goes. Going to go back to the weekly chart, and we're going to go to the Qs. Again, that's the NASDAQ 100. For the day, on Friday, it was up 0.54%. Doesn't look much like it, though, when you start looking at these candles, the weekly candles, big down moves, getting close to crossing over on the Qs for potentially the next week. We've had 3 down candles the last 2 weeks, strong down moves on the NASDAQ 100. Again, the technology stocks, the derivative oscillators weakened significantly, and the MACD and signal line have gotten very close together, converging. We may have a crossover. Continue to watch that. When that occurs, you are then in a confirmed down move on the biggest of the charts we look at, which means things tend to be trending down at that point. Even though you might get some spurts up till the market totally rotates over, the market is going to default to a down move. So trying to trade against that or invest against that is probably not going to work all that favorably for you. Keep that in mind. You always need to know what's going on these big charts so that you can make big chart trades where you have everything going for you. It's like being out in the ocean and maybe everything calms down, but you see a big wave coming. Well, you know that big wave's typically going to get you. Now, if you're on a surfboard and can paddle into that wave and ride it in, all the better. That's what we're talking about doing. We're not talking about going headlong into it. It's probably going to pummel you. So I love those wave analogies because I like to surf. That's where we are on the weekly Qs. Again, the NASDAQ 100. Let's look at what happened throughout the week. On Monday the 2nd, a little bit of an up day as far as our Hinkin-Ashi type candlesticks go. Down on Tuesday, Wednesday, up a little on Thursday. Down on Friday, like I said, for the day, down over half, on Friday, over 0.5%, still well below the 2-day trend line. Lastly, before we go to the news, we're going to go back to our weekly chart. We're going to take a look at gold, which was up on Friday, 0.91%. What do we see with gold? Well, gold is in a confirmed up move since way back on the 8th of January. As the market started going down, gold continued to shoot. Gold actually started shooting up. Gold peaked out around the week ending on the 11th of March, and then really has slidden sideways mostly. It's gone down a little bit. It was pretty much slid sideways up until it sort of kinked back over, moving up around the week beginning, right at the close of the week, rather, on the 22nd of April. It then, with that week ending on the 29th of April, really started moving up, another big up week for gold. Derivative oscillator rotated over, going down on the 22nd of April, and it switched back over on the week ending the 29th of April and the 6th of May. So we're a confirmed up move still on gold, like I said, have been since January the 8th. It got close to crossing over around the 22nd of April, but that did not happen. Just because it gets close does not mean it's happened. We have to remember that all the time. What's been going on the daily chart for the past week? Gold up big on Monday, and then sort of floundered the remainder of the week until Friday, where again it was up almost 1%. Still well above the 2-day trend line. For those of you who do pay attention to the daily forecast, want to find an entry point in gold, continue to watch. We don't have a crossover going up yet on the 4-hour chart, but we're getting close to that. That is where we ended on all of our charts for the week. Let's talk about the news. What did we have happen over the last week? Well, interesting. We saw global equities falling, and there were concerns about signs of a sluggish Global economic growth, well, no surprise there. If you listen to our weekly review and forecast often, you know how we pretty much feel about things. If it weren't for the free money, the Fed keeping the interest rates down, that seems to be the thing that affects the market the most. As long as the Fed promises to keep interest rates near zero, the market seems to just fly up regardless of how bad things might actually be. We did have what really weighed on the market this last week, downbeat employment reports. And of course, what are the market watchers saying, the talking heads? Well, that bad news should help keep interest rates down. So whatever slight chance there was that the Federal Reserve might raise rates when they got into that June meeting, well, as the U.S. Department of Labor released unemployment numbers, their non-farm payrolls rose 160,000. That was well short of the 200,000 consensus. Their downward revisions of the prior 2 months, trimming a further 19,000 jobs. We see the unemployment rate holding steady at 5%, and participation rate dropping to 62.8 from 63. So again, who knows? What we care about is what's going on with charts and how any big news might affect our big charts. What about crude oil? Well, there apparently was a fire in Alberta. That disrupted crude production. We saw that Puerto Rico ended up defaulting on their bond payments. Again, just another hit to the economy. We see PMI shows that global growth remains slow, so no surprise there. The Reserve Bank of Australia is the latest central bank to end up cutting its rates. The European Commission ends up doing what? Well, cutting growth and inflation forecasts. So again, not good news around the world. What do we have affecting things over the course of this next week? Well, we see that on Monday, the Eurogroup finance ministers are going to meet. That's going to be interesting. We'll see what happens. Again, what kind of impact will that have on the market? If it's super, super bad or super, super good news, it might. But again, I'm not holding my breath on that one. China's going to report its trade data and foreign exchange reserves. That'll be interesting to watch. You might just listen out for that on Monday. Then we're going to see the next thing that's really going to happen, not until Friday, is going to be on Tuesday. China's going to release its consumer and producer price data. That'll happen on Tuesday the 10th. And then we're going to see finally on Friday U.S. retail sales figures. So not a big week in news necessarily. And again, you can keep your ears open for it. But the main thing you need to do, pay attention to these charts. These charts are what you go to, from the total market to the S&P 500 to the NASDAQ 100 to gold. That's what we look at every day, and we do this weekly review and forecast so that you're able to see what happened over the last week and what might be happening over the next. We love hearing from you. If you really care about what we do and would like to give us a nice payback for the free service we provide, I ask you for one thing. Would you go to iTunes? Would you subscribe? And would you, more than that, give us a 5-star rating and say something about us? Now, don't forget, we have both a daily, and we also include on that our weekly, but we have a daily podcast, and we also have a video weekly podcast. And we would love to have you sign up and get both of those. But if you're going to get just one, get the daily. And thank you so much for listening. You can go to our website, chartingwealth.com, sign up to get everything that we do, actually a link emailed to you every day. Makes it really easy. With that, you'll also receive with that email our How to Read a Stock Chart video, which you've got to listen to. 15 valuable minutes of great information to understand what we're talking about and why, what all the different indicators we use, the candlesticks, all that, how they all work together to help you make intelligent decisions for practicing your virtual trades for both trading and investing. And we just appreciate you being with us. Follow us on Facebook, Twitter, Instagram, YouTube. We are there for you. Thank you so much for joining us from Charting Wealth.